Can you imagine that if you invested $1,000 in Nvidia stock on October 5, 2020, 5 years before, today you would have $13,000, and if you are brave enough to invest $10,000, today you would have $130,000 sum. That is a crazy return of money for just investing $10,000. It is a return of 1,361%. That's how high Nvidia has gone, and it's not like we didn't know about the company 5 years before. Nvidia was still a very famous company even 5 years before. Is it a good idea to invest in Nvidia stock today? When it comes to the recent news about Nvidia stock, Nvidia has recently committed up to $100 billion in a strategic partnership with OpenAI, with much of that funding expected to be used to purchase Nvidia hardware. Nvidia is investing $5 billion in Intel, acquiring common stock as a part of collaboration to fuse Nvidia's AI GPU strength with Intel's x86 platform capabilities. In Q1 of 2026, which ended April 2025, Nvidia reported $44 billion in revenue, which is up 70% year over year. That is great. A 70% increase year-over-year revenue for Nvidia, and data center segment accounted for $39 billion of that.
So how are you, if we could just take a step back, how are you thinking about the whole Nvidia phenomenon at $4 trillion against this backdrop of just broad AI demand, as well as just appetite in the market for kind of this risk-on sentiment as made evident by the Bitcoin move?
Well, to me, Nvidia being the most valuable company in the S&P makes a lot of sense. I mean, that's scarce. I mean, how many Nvidias are there in the world, right? There's 50,000 stocks. There's one Nvidia. And so it is scarcer than like Da Vinci. So I do think the multiple at around 30 times is actually not that extended, given how important they are to the AI ecosystem. So I think there's earnings visibility, and then there's multiple expansion potential.
Multiple expansion potential for Nvidia, as well as just the broader NASDAQ from here. Do you think there are significant catalysts to the upside?
Yeah, I think to the extent that there's companies that are producing durable, sustained earnings growth, whether it's the Palantirs or the Nvidias or the Teslas of the world, they do deserve higher multiples. And you know, something that we've been writing about is how this market endured 6 essentially black swans in the last 5 years, thrived in terms of earnings. Normally, we would assign a higher market multiple to that. And believe it or not, the mean S&P PE, so if you do the S&P equal weight, was 17.9 on the eve of COVID. It's about 0.7 turns lower today. We're like at a 16 mean multiple, meaning the market got cheaper after 6 black swans. I almost think we should be expanding that PE.
There are some complaints this morning about, again, market concentration, right? When you got the top 10, is it 40% of market cap? Something. Nvidia alone's almost 8%.
That's right. But then again, these exact companies are a huge share of earnings growth, you know? So I think that the S&P is benefiting from the fact that it is sitting at the center of AI, which is a huge global driver of CapEx spend. It's going to help S&P earnings. And then the other piece is, of course, financial innovation, which is taking place. I mean, Circle and the cryptos have shown that that's another piece where there's a lot of earnings growth. And again, that's a growing share of the S&P.
And future growth heavily depends on next generation architectures like Blackwell, Vera Rubin, and Feynman. And analysts remain bullish, sentiment consensus strong buy, and the average 12-month target is around $204, with some forecasts going as high as $250 for Nvidia stock. However, there are still challenges when it comes to geopolitical tensions, export restrictions to China, and competitive threat from customers building their own AI chips. So now let's look at future prospects and catalysts for Nvidia. Now this is where things get exciting but also a little risky. The world is in the early phases of an AI computing infrastructure build-out. Data center capex, especially for AI workloads, is projected to surge. Nvidia, with its GPU and software ecosystem, is one of the primary beneficiaries. The thing with Nvidia is, Nvidia does not just sell chips, it sells the whole stack. That ecosystem is hard to replicate, and that is what gives Nvidia staying power over everyone else. And the next one is aggressive ecosystem investments. Their investments, OpenAI, Intel ecosystem partners, they're not just financial but strategic. They help lock demand into Nvidia's own tech. The next advantage that Nvidia has is their global presence and scale. Nvidia is a recognized leader in the AI market. It already powers many hyperscalers and AI labs. That gives it leverage, scale, and bargaining power over everyone else.
Tom, I wanted to spend a minute, if I can, talking about a company called BitMine Emergent Technologies. You recently became chairman of that company, correct?
Yes, that's right.
I want to ask you a few things and just see if I got this right. Now, the stock, I mentioned, it hit 161 very recently. It's been very volatile. The company did a PIPE, 250 million, I think sold as many as 55 million shares at, I guess, 450 or so a share, correct?
Yes.
Those shares have not yet been registered. Is that correct?
That's right.
Okay.
They will eventually be registered.
Okay. I want to make that point because, when you look at FactSet, you got 6 million shares out. It's a 300 million or so market cap, but that's not the case. This has got 61 million shares outstanding,
Yes.
at least, and a market value, therefore, even at 55, that is many billions of dollars, correct?
That math works.
Okay.
I'm following your math.
You're going out, you're spending the $250 million to buy Ether, is my understanding, or maybe a little Bitcoin, but mostly Ether.
Yes, it is for Ethereum.
Okay. And so this trades at a huge multiple to the amount of Ether you conceivably could buy with the money that was raised in the PIPE.
Yes, I mean, in the press release, there's a sort of a discussion about Ethereum treasury strategies, and to us, there is like a logic to what these companies are trying to do, because one, they're actually going to be using whatever relative premium exists to actually use capital markets to grow their Ethereum holdings.
Okay, so meaning what? You can add value to the overall holdings that you have through things that can be done in the Ethereum ecosystem.
Yes, as well as like taking advantage of the premium that exists in capital markets activities.
I see.
And of course, I think that there is really a rediscovery of Ethereum that's taking place, because Ethereum itself is one of the best performing crypto assets. It's up, annualizing,
right.
It's really taken off recently because the stable coin is the ChatGPT moment for crypto. Circle has blown the doors open. There's a lot of interest now on Wall Street getting involved with Ethereum and building stable coins.
Now, when it comes to the risk and headwinds that Nvidia is going to face, the first one is the obvious, the geopolitical and export controls. US export restrictions to China, a massive market, could constrain growth. And the next one is self-competition. Big tech companies like Meta, Amazon and Google might develop custom AI chips, which is a possible threat. And when it comes to the valuation, the stock already encodes very, very high expectations, and any disappointment in earnings, guidance or external shocks could lead to sharp pullback. And when it comes to competition and alternative architectures, alternatives, for instance NPUs or emerging hardware, may challenge the GPU-centric paradigm of Nvidia. Now, when it comes to the bull case vision of Nvidia, if Nvidia captures even a modest share of the AI infrastructure spent over the next 5 to 10 years, and if its new architectures deliver as promised, the stock could see several fold upside even from here in the bull cycle. And some analysts even point towards the possibility of the stock reaching $700+ in a long-term scenario, though that is still speculative. Well, Nvidia gives OpenAI $100 billion to spend, mostly on Nvidia hardware, and Nvidia share price goes up by $220 billion. Following its recent surprise $5 billion Intel deal, Nvidia is spending big again, this time committing up to $100 billion to OpenAI alongside supplying millions of its chips. The move fits a broader pattern in which Nvidia channels money into businesses that rely on its own hardware, from $6.3 billion in CoreWeave to $700 million in Nscale, effectively reinforcing demand for its product while bypassing hyperscalers like Google and Microsoft, which are racing to reduce their dependence on Nvidia's hardware. This latest investment into the world's best-known AI firm immediately lifted Nvidia's market value by more than $220 billion, because what they're trying to do is they're trying to control the market. This deal involves a circular structure, and we'll see Nvidia will buy non-voting shares in OpenAI, which OpenAI will then spend mostly on Nvidia systems. Citing people familiar with this matter, Reuters says the partnership will begin with a $10 billion investment and scale as OpenAI deploys more compute computing power. This is the biggest AI infrastructure project in history, Nvidia founder and CEO Jensen Huang said in an interview with CNBC. This partnership is about building an AI infrastructure that enables AI to go from labs into the world. He said the companies will build data centers capable of running next-generation AI models powered by Nvidia's new Vera Rubin platform.